Bloomberg Audio Studios. Podcasts, radio, news. You're listening to the Bloomberg Balance of Power podcast. Catch us live weekdays at noon and 5 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
We got two separate statements from spokespeople for the White House yesterday in the aftermath of what was immense selling pressure, taking stocks down to the lows of well before Election Day. In fact, the worst day we saw on the tech-heavy NASDAQ 100 going back to 2022, with no real direct remark from President Trump. No saying, markets, calm down, my tariff policy won't actually be that bad. Instead, actually what we got today was a doubling down on the threat of tariffs, at least in the case of Canada, going from a 25% rate on steel and aluminum to now 50%.
And a promise to shut down the auto industry in Canada while he's at it, which we're pretty intertwined with here. These, as you mentioned, Kailey, are set to take effect at midnight, would be along with all the other countries facing steel and aluminum tariffs, and a market that just doesn't know what to do with it. As we told you, the president will be speaking to the Business Roundtable a bit later on today. You were there when he spoke as a candidate. Very different world we're in, I'd say now, but the very same people who were expressing concern over policies like these will be there. And we're going to talk in a moment with Joe Lavorgna, of course, former Trump economic advisor. First, Laura Davison, Bloomberg politics editor, is with us at the table as we try to get our arms around all of this. It's good to see you, Laura. This is a president that was supposed to be obsessed with Wall Street, driven by the markets. Not so much this time around?
Well, at least right now, though it's clear that both he and his allies are very worried about what they're seeing in the markets. We didn't hear at all from the president yesterday. That's really unusual. Normally he comes out and speaks to the press at least once. Later today, he's set to speak with a bunch of CEOs in Washington. We'll see, how that goes. The CEOs are very concerned about these tariff policies they see, and really the uncertainty of their, set at one level the next day, they could be doubled the next, repealed the final day. Nobody knows how to plan, and that's what's feeding into a lot of the market reaction we're seeing today.
Well, and I'm sure that is what business leaders would have to say to President Trump this afternoon, that they notoriously don't like uncertainty, nor do people who are trading financial markets. Do we have a sense of if this is going to be a two-directional conversation, Laura? Is he going, giving a speech, and leaving without hearing them out?
Generally, how these exchanges have gone in the past, there has been some sort of question and answer where CEOs get to pose questions to the president. Generally, this has not been in front of the press. Even staff is generally not allowed in the rooms. The idea is to keep these meetings very tight, though we have gotten some readouts from previous meetings. Back in the spring when he met, last spring, before the election, when he met with them, he said he was going to lower the corporate rate to 20%. I think we'll also see some questions from CEOs saying, hey, we're really hurting from these tariffs. When are we going to get these tax cuts?
Boy, I don't know what the message will be or whether even if we'll hear it, because this will be largely behind closed doors. From what we understand, that would be typical for the Business Roundtable. But every time Donald Trump goes on Truth Social, the markets kind of brace for what's coming next here. And we've got a CPI report tomorrow morning. We've also got a vote on a stopgap to keep the government running here. We've got a lot of plates we're spinning in the air right now. What's the communications office going to be doing at the White House in the next 12 to 24 hours?
They're clearly trying to spin this forward, saying, look, this is going to be just a period of, a little bit of unrest, but soon the market will figure out and decide that these policies are correct. I mean, this is really going to be the issue. If you've got donors, you've got other people who are already concerned. Businesses are cutting their forecasts, saying, look, we just don't know how to plan. Consumer sentiment is shaky. Small business sentiment is shaky. This is not just one bad indicator. This is a lot of bad indicators, and it's going to be very difficult for the White House to just talk their way out of this one.
Well, and I would imagine that's why the White House, through at least right now, Vice President J.D. Vance, who was dispatched to Capitol Hill today, are emphasizing extra that a continuing resolution to keep the government funded beyond midnight Friday is necessary to pass, urging no dissent.
Yeah, so we see the House, they've already decided they're going to vote today and then leave to try to jam the Senate. That could also potentially, throw a wrench into the system. It's really just not a good day to be at the White House. You have a lot of things that could potentially go wrong. And if, there is a shutdown, even a short one, or, we see, markets continue to fall, there's a bad meeting with the CEOs, all this could really just continue this tailspin.
All right, Laura Davison, Bloomberg politics editor, thank you. so much. And tailspin is one way to describe it, Joe. But what we're seeing is not just a down pressure on risk assets, but you're also seeing some specific language floating around out there, be it stagflation, people floating the idea that it's the end of U.S. exceptionalism, and increasingly the word recession seems to be entering the conversation.
That was the fallout from the weekend. That was why we were blaming losses yesterday on this, and it's still resonating. And I'll be curious to hear if the R word starts to emerge in more conversations with credible economists. It was really just a Sunday morning interview. President didn't want to rule it out. That got us this far.
Well, it did emerge in one conversation between a former Treasury Secretary, Larry Summers, who sat down with our colleague David Weston earlier today and had this to say.
I think you have to say that there's in the range of, I'd say still slightly below, a 50% chance of a recession starting this year.
So let's see if our next guest agrees with that. Joining us now here on Bloomberg TV and radio is Joe Lavorgna. He's former special assistant to the president and chief economist at the National Economic Council during the first Trump administration. He's now chief economist and managing director for SMB Nikko Securities America. Joe, welcome back to Balance of Power. I don't know if you think recession odds are in the ballpark of being a coin flip here, but do you at least see greater risk of it now than perhaps before? It seems to be the prevailing wisdom on the street.
It's higher, Kailey, than it was before, because it seems like this administration is actually going to be very serious to the extent possible in trimming government spending, which has been a huge prop to growth the last several years. So that does increase, if not recession, certainly a period of subpar growth. But that clearly would be a good trade-off for what would be a much more sustainable fiscal trajectory. The recession risk is not as high, in my opinion, as what Larry Summers just mentioned, but it is rising. That may be the price to pay, though, to get inflation back under control and to really rejigger the government's finances, which are really a mess.
That would, though, portend, Joe, and welcome back, a more optimistic view for the long term, wouldn't it? I know you're a chief economist and not a chief investment strategist, but what do you make of this visceral reaction on Wall Street, which is, of course, trying to price out where we're going to be 6 to 9 months from now?
Right now, Joe, thank you for having me again. Right now, this is a correction. And the market, S&P, had been up 20% plus the last couple of years. The very narrow growth concentrated in a very select number of stocks. P ratio is very high. The equity risk premium very low. We had good growth last year. Unemployment was very low, but we ran a budget deficit to GDP almost at 7%. That's not sustainable. I am optimistic, very optimistic on the outlook, because I see trend productivity, which started to recover rapidly under President Trump. It continued over the last few years. You've got this huge AI boon. We need to get capital expensing back full thrust to keep CapEx strong. So I'm very upbeat on the outlook. I think we're living remarkable times. But it's going to take some time. As the Treasury Secretary, I believe, said last week, we're going to be in a detox phase. And this is what we're living in right now.
Well, so if it is all about the outlook and what's going to happen longer term, Joe, usually markets, being discount mechanisms that are forward looking, would reflect what's going to happen in the future. It's not just about right now. Typically, they can look ahead to what's coming down the road. And that doesn't seem to be happening at this moment. Are the markets wrong, or is this side?
No,
please.
No, I think the markets are wrong. I mean, if you look at credit spreads, they've held in very tight. If there was real recession risk, we'd see much more stress there. The bond market tends to sniff that out much sooner. It tends to be much more accurate than the equity market. As I said, we had a huge rally in the equity market, and this is correction phase. Once the market gets clarity, and there will be clarity at some point, there will be a tax bill passed this year. The sooner, the better. That will provide clarity. Once we get a continuing resolution to fund the government through the end of the year, that will provide clarity. And as we move into April, after the April 2 reciprocal tariff dates, we're going to get some clarity on that as well. So I think, Kailey, we're going to see the markets kind of congeal and sort of stabilize and eventually move higher if there's no recession.
Is Donald Trump a changed man here? Joe, you've actually had a chance to sit in the room. You ran the National Economic Council in the first Trump administration. You've talked about his view on the stock market, and that's always been the rap. He's driven by the markets. He kind of measures his success by the markets. But now we're talking about a drug war, not a trade war, and a different set of principles And there are new questions about whether he cares about this market reaction. He said just a couple of days ago he hasn't been watching it. What do you think?
He definitely cares about the markets, but Joe, it really is, where is the stock market? Where is the economy in 12 months, 24 months, 48 months? Where are we over the next handful of years? As you know, from following markets, I've been doing this for a long time. People get nervous and they tend to overreact. People, I think, right now are being way too emotive. The president certainly cares about the markets, cares about Wall Street, but cares more about Main Street. And it's his strong view that eventually we're going to bear significant positive fruit to Main Street, because that was the case in his first administration when you had roughly a 6,000 increase in median real family income, which was about 6 times what had been the prior 16 years. So the president cares about these things. But as I said, this is going to be an adjustment, a reset process, and the market ultimately will see in a positive light despite the volatility we have right now.
Well, and it doesn't seem that the market is only paying attention exclusively to what the president says, Joe. You can also look at what we're getting out of corporations, warnings from retailers today, from airlines about waning demand or the impact of tariffs. The business community does seem to be signaling that there is going to be an impact, certainly on their bottom lines, but as they see shifts in consumer behavior. Some of these very same business leaders could be in the room when the president addresses the business roundtable this afternoon. What do those leaders need to hear from him in order to restore business confidence and consumer confidence?
Well, let me say that the business confidence, if you look at the NFIB, we had the data today. Yes, you had a big increase in uncertainty as it relates to tariffs. And of course, the tax bill, let's not exclude that, because to me, the tax bill, the uncertainty whether those tax cuts get extended is very important. But small business confidence is very high, still over 100. I mean, at the corporate level and where earnings come in, that was a function of the economy prior to when the president came in office. Clearly, CEOs are worried about the outlook, but these tariffs really have not been fully put into effect yet. We don't know exactly what the impact is. And to the extent there will ultimately be higher tariffs, I do think there'll be some level of higher tariff than what we had. If it comes at the expense of a continuation of low marginal rates, a reduction in corporate tax rates, lower tax on tips, overtime, and Social Security, that is, to me, is a very good trade-off. Those supply side initiatives, I'd argue, would offset any weakness that people are worried about on the demand side, which I think too often maybe corporate America focuses too much on short-term demand and not long-term sustainable supply innovations that keep productivity and living standards ultimately higher.
Question from a listener on the terminal here, Joe. What's the end game with the tariffs? Is it to strike a deal on a so-called Mar-a-Lago Accord? I guess to maybe expand on that a little bit, is there a grand scheme here that maybe the market doesn't know about? Or is Donald Trump riffing every day, throwing stuff at the wall to see what sticks?
No, they're definitely no. If you look at how many executive orders there have been, it's been unprecedented, because the administration clearly had a very strategic view of what they wanted to accomplish when they came in. I believe they know what they want to do on tariffs, but they're not going to say it publicly because that is negotiation, and you wouldn't tell people exactly what they're doing. And I have to think that ultimately there will be some sort of deal. The president's very transactional. He's got very good business sense, very good business skills, and there will be some resolution. But what it looks like, Joe, I don't know. But ultimately, the benefit is going to be geared toward the U.S. performing well, and that's how President Trump ultimately will be measured. Where are we 4 years from now? Where's the equity market? Where's the unemployment rate? Is the inflation rate back down well below 2% as it was in his first term, or is it up near 3%? All those factors will come into play, and I think too often we want results too quickly. We're too impatient. And, it's only March. I don't know if we haven't even finished the first 100 days yet. And that here we're talking about losing U.S. exceptionalism. I think that's that's too much doomsday.
Well, Joe, we could add to that list potentially in terms of where the unemployment rate is or what have you, also where borrowing costs are, what the average 30-year mortgage rate is. What does all of this conversation do to your expectations around where monetary policy will change?
Right now, I see the Fed on hold. I do think rates ultimately will move lower, getting rates ultimately probably down to 3%, maybe a bit less. That assumes an economy that's growing at roughly 3%. That, Kailey, would take the 10-year note on a sustainable basis to around 3.75, maybe 4%, so lower. We'll have a steeper curve at lower yields. That would also be consistent with an inflation rate around 2%. I mean, the world that I envision is one that is very similar to what we had prior to the pandemic. GDP growth around 3%, low and stable inflation, very low and stable unemployment, and a very strong equity market.
Joe, it's great to have you back. We'd love to compare notes once we understand how this conversation went at the Business Roundtable. You're always welcome here. Of course, former special assistant to the president in the first Trump administration, chief economist, National Economic Council, now SMBC Nikko Securities America. Really interesting, Kailey, as we try to feel our way through this with so much uncertainty in the air and a market that's pointing lower.
Yeah, and of course not for the first time. It has been a pretty brutal several weeks, and yet no direct comment on that from the president, at least at this point, beyond saying yesterday he's not looking at the stock market. I think it's hard not to be looking this week.
That's true. I guess I'll need to say something a little bit later on. We'll assemble our panel next. We've got an important vote in the House today to try to keep the lights on this weekend. This is Bloomberg.
You're listening to the Bloomberg Balance of Power podcast. Catch us live weekdays at noon and 5 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Here in Washington, an important vote set to take place just hours from now in the House of Representatives, where a continuing resolution that would keep the government funded through the end of the fiscal year, September 30th, is set to hit the floor. The thing is, Republican leadership is not counting on any Democratic votes for this measure, which means they have to keep basically the entire conference together on this one because there's only so many votes that they can afford to lose, presuming that you have attendance that is as expected on both sides. The thing is, though, Joe, already you have one hard no, likely unchangeable no in Congressman Tom Massey, the gentleman from Kentucky who is now being threatened with a primary challenge by President Trump. But there's others, too, not necessarily taking as hard a line as Massey on this, but saying at this time, even after meeting with the Vice President J.D. Vance on the Hill earlier today, they remain undecided on whether they're going to vote for this.
Similar names we've been hearing: Burchett, Crane, McCormick, Ogles, Gonzalez. Got about a half dozen here on the fence, so I suspect that the phone call will start coming in from the White House soon, unless, of course, the strategy is to bring everybody on the floor and dare them to vote no.
Yeah, which we have seen in the past, mind you, when they were trying to pass their budget template, which is setting the stage for the reconciliation battle that still has yet to come because we have so much to look forward to. They let everyone leave the floor, then called them back immediately, and suddenly the votes were there.
13 minutes later.
Pressure's an amazing thing.
Well, we heard from the speaker a little bit earlier, of course, Kailey speaking optimistically about these holdouts. Here's what he said.
You can all read the bills, 99 pages. This clean CR contains no poison pill riders, no policy riders there at all, no cuts to Medicare, Medicaid, or Social Security, zero, no cuts to veterans benefits, zero. In fact, as was noted, we plus up the accounts for veterans.
Wouldn't want to be Tom Massey today. I can only imagine the emails and phone calls Donald Trump takes to Truth Social, referring to him as a congressman with quotation marks. I won't read this whole thing. It's another long one, but he says Thomas Massey is a grandstander, and the great people of Kentucky are going to be watching a very interesting primary in the not-too-distant future. If you're with us on Bloomberg TV or YouTube, you can take a read yourself as we assembled our signature panel. Rick Davis is here, Republican strategist and partner at Stone Court Capital, alongside Jeannie Shanzano, our Democratic analyst, senior democracy fellow with the Center for the Study of the Presidency and Congress. What do you think, Rick? Does the pressure play work? Does this pass?
Well, I think they're beyond pressure with Tom Massey. Now it's just recrimination. Yeah. And we have to look at the history. And every time there's been a big vote, even before Donald Trump was elected, when he intervened, he changed people to his position. So my guess is he'll get what he wants out of this. And frankly, he should, because, I mean, the reality is this is much to do about nothing. We got to keep the government floated financially. This is insane that we're even having a conversation about a full year CR. It is an indictment on Washington. You can't pass appropriations bills. You can't set policy. They should all turn in their paychecks for last year. It's just amazing. But that's where we are. It should be non-controversial. And I think not only will the House pass this bill, but I think the Senate's lined up to do the same.
Well, and typically we've seen, at least in recent years, not only is this, it's always controversial, but at the very least it can be nonpartisan or a bipartisan effort, Jeannie. Typically, Democrats do support or provide the votes needed to keep the government open when it counts. They have signaled they are not willing to do that this time. At least leadership has signaled that. And I do wonder if you expect every Democrat to stay in line with Hakeem Jeffries when this thing goes to the floor, if there could be some breaks to his guidance.
There may be some breaks. I mean, he has really been whipping a hard no on this. And of course, for Democrats, they had no input on the bill. And the clip you just played, we heard Mike Johnson talking about how this is a clean CR. Well, almost clean. It's not quite clean, according to the Democrats. And in particular, the fact that it does give the executive branch more discretion, the federal government, to spend money. And that, of course, is a non-starter for the base of the Democratic Party, very concerned about an emboldened Doge. And so it's not clean from their perspective. But I do think most Democrats will stick with Hakeem Jeffries. But I agree with Rick. In all likelihood, this gets through the House. At least that's been the record. Mike Johnson seems to go right up to the line and then they pass. And if they get out of town, I think the Senate will be able to avoid a filibuster, which means you're going to need to see about 8 Democrats go over. But I just think it's hard at this point for Democrats to imagine shutting down the government. That said, this is going to be very tight. And a lot of this depends, for instance, on things like who's actually present today when they call this vote, which it looks like will be later this afternoon.
We've been talking about the stock market here quite a bit for obvious reasons over the last couple of days, including this one. And we can tell you the headline just crossed the terminal. The S&P 500 set to enter correction territory after falling 10%. That, of course, being the definition from the record high. And Kailey, it follows some commentary from the press secretary being asked about this, as you would suspect, a snapshot of a moment in time is how she describes the market.
After saying that we're in a period of economic transition, very similar language to what President Trump said in that interview on Sunday Morning Futures that ran over the weekend, in which he refused to rule out a recession. Noteworthy, though, to now be speaking about the stock market as a snapshot of a moment in time compared to the language about the stock market we heard in the first Trump administration, perhaps Trump's language about the stock market when President Biden was president. It does seem like there is a bit of a tone shift underway here, as we're seeing equities obviously taking tariffs on the chin, not just a 10% correction territory now for the S&P 500, but the NASDAQ is already well below that territory.
S&P 500 down 83 points right now, by the way. We're down 1.5% at the moment, and a bit of a fit here after Donald Trump made that post on Truth Social. There was talk of a recovery today, and that has obviously gone out the window. Rick, when you add the uncertainty over government funding, over the debt ceiling, over Trump tax cuts, how important is this vote today for the view of the market?
You know, look, it's a confidence building exercise. They can't really do any good with this. They're not like showing fiscal responsibility. It's a CR. It's just a kick the can funding mechanism. But if it doesn't pass, it's a huge problem. So they're not going to get any credit for doing the coward's way out. But they will get blamed if, for whatever reason, something this benign doesn't get passed. And I think Democrats and Republicans take it on the chin. They will both get blamed by the market, because we'll enter this period of political instability that we've seen in the past, where you can't make business decisions based on the political instability of the system in Washington. And I think that's what today's all about, is avoiding that appearance. Last thing we want is Moody's looking at the federal government and saying, potential downgrade because they can't get their act together. I mean, that's like a horrible indictment on the system and the people in it.
Well, and I guess the White House is very much trying to read the market activity as not being an indictment of the president's policies. But Jeannie, the suggestion from the press secretary that what financial markets are reflecting right now, or where stock market levels are, is just a moment in time. Are you surprised by this language coming from the White House, given how previously they've talked about the stock market? Just weeks ago, President Trump was touting stocks at record highs.
Yeah, I am so surprised. First of all, they obviously haven't been listening the last couple years when we raked Joe Biden over the coals for using the term transitory. And to me, a snapshot is very much just a synonym of transitory. And the other thing is that, right before his inauguration, Donald Trump went to the arena and he talked about, with great celebratory, sort of, look at me, look what all I've done to the market. That's all been wiped away. And now they're saying, well, it's just transitory. This to me is quite stunning from a man who typically likes to tout the crowds, likes to tout the strong numbers, who ran on making America affordable again. And all I can just imagine is that this explains his silence over the last 24, 48 hours, except for his his truthing against Canada and about Elon Musk. He has been suspiciously quiet, and we have to wait to see what he says to the roundtable. But the communication strategy here from Donald Trump speaks volumes, because it's not like Donald Trump to be quiet.
Well, we got a couple headlines coming out of the press briefing, Rick. Before our global television audience joined us, we were talking about Donald Trump's post on Truth Social after midnight in which he pledged to buy a Tesla to help support Elon Musk, who he says is under great distress here and being criticized by the other side. Press secretary says a Tesla is on the way to the White House now, remembering Donald Trump was gifted a Cybertruck on the campaign. I mention this, Rick, because Elon Musk is a big factor here, and I wonder the extent to which you see him playing into the uncertainty on Wall Street. How much of this is tariffs versus the rest of the DOGE policy and the cost-cutting efforts in this White House?
Well, there's no question that Elon Musk is taking the brunt of the downsizing the federal government argument for those people who aren't happy with what they're seeing, right? I mean, it's just actually amazing how much Elon Musk has been this tip of the spear on a policy that Donald Trump's been talking about for almost 10 years. And so that's been a huge help to Donald Trump. The fact that he doesn't have to take all the barbs, he doesn't have people at the town hall screaming his name to Republican office holders about their unhappiness is a huge advantage. And honestly, this is a part of Donald Trump's kind of attractive. Does he actually care about Elon Musk's feelings and the fact that being hurt because he's thrown himself into the political fray in Washington? Look, put on your big boy pants and go to work. There are things to be done in Washington, and you shouldn't have to buy someone's Tesla to make them go into the office in the morning. Come on, let's get our act.
Well, Rick Davis and Jeannie Shanzano certainly showing up for work today, joining us here on Balance of Power, our signature panel. Thank you both so much as we keep one eye on domestic politics, another on geopolitics with the U.S. and Ukraine's talks underway in Saudi Arabia. We'll have more on that in just a moment as we also keep our third eye, I guess, on financial markets. The S&P 500 touching into correction territory. We'll have a check on those for you on the other side of the break here on Bloomberg TV and radio.
You're listening to the Bloomberg Balance of Power podcast. Catch us live weekdays at noon and 5 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
The trading on this Tuesday, which initially we thought might see the start of a rebound after the brutal selling pressure that rippled across U.S. equity markets yesterday, and instead a Truth Social post from President Trump raising the planned tariffs on steel and aluminum for Canada specifically to 50%, set to take effect at midnight, seems to have sapped risk sentiment all over again, and dip buying doesn't necessarily seem to be materializing at this moment as we look at correction territory on the S&P 500. So for more, as Charlie promised, we go to Mike Regan, Bloomberg senior editor, who is joining us from New York. Mike, at what point is this just the selling pressure kind of amplifies itself and we're looking at technical levels here and kind of algorithms kicking in, or does this still seem to be active decision-making on the part of traders to trade off of what we're hearing from the president?
Yeah, Kelly, I think my guess is that it's a little bit of both. From a technical perspective, if you look at the chart of the stock market, it's really just a classic downtrend since the last high in the S&P 500 on February 19th. So, that trend until it's breached and it looks like, it's broken that downtrend, technically minded traders are going to be a little bit nervous about what this market looks like right now. The S&P is below its 200-day moving average. First close yesterday in a long time below that average. That's another signal to technically minded traders that, this sell-off is not your classic, sort of minor correction, that it is potentially something more serious. But as I was saying earlier, I would also point out that, this has kind of gone beyond just the headlines from Trump and his posts on social media and his comments about tariffs. We are seeing companies themselves, Kohl's today, Dick's Sporting Goods, really giving sort of alarming forecasts for their profit in the rest of the year that is really catching investors' attention. And those stocks are down pretty significantly. It really looks like it's being translated from just sort of tweets and posts from Donald Trump and sort of confusion about tariffs to actually what looks like to be the start of damage to corporate America's profitability, in part because obviously if you fire a lot of government workers, that's going to reduce some consumer demand, and it makes other consumers nervous. It makes companies confused about how they should respond to these tariff threats. So it is getting beyond just sort of the headline risk and the social media post risk from Donald Trump into something more serious with these companies warning about their profit forecasts. Kailey.
I just wonder, Mike, what capitulation looks like here. You've got a VIX bumping up against 29 now. And we heard another call this morning, 5,500, much like we heard from Mike Wilson at Goldman Sachs, JP Morgan Asset Management's David Leibovitz. He says it's time to start writing a shopping list. Mike, when do we know it's time?
I think, Joe, I'm not sure that that's consensus, that this is a dip that is to be bought at a certain level. We have seen other strategists being much more cautious. So, it's hard to really say where the bottom of this is. I think what Wall Street really craves now is a little bit of a softer tone from President Trump on the tariffs. And not to mention all of the other, the cuts in spending, all the DOGE cuts being made and the firing of government workers. A lot of this is adding up to real concern about the strength of the consumer for the rest of the year. So I'm not sure it's one of those sort of dips that reaches a level where, you see this knee-jerk response and people start to buy into it. That certainly could happen. But I think this correction, this sort of drawdown from the highs is likely here to stay for a while until we learn more about how aggressive President Trump really wants to be with these tariffs. He's very flexible and sort of tends to change what he wants to do with tariffs quite a bit. And I think what Wall Street's really coming to grips with right now is that this correction in the stock market is not yet enough to really change his mind about trade policy and all his other policies. So, I think this drawdown is here to stay until there's more clarity on exactly, where the line in the sand is for Trump as far as how aggressive he wants to get with tariffs and with, cutting government spending and the job cuts that come along with it.
Mike, we can't thank you enough. Mike Regan, Bloomberg senior editor, super helpful these last couple of days, and we might need to stay close on this. Joining us live from World Headquarters in New York. Of course, Kailey, we're going to be watching the meeting, the Business Roundtable, after the closing bell, 5 p.m. Eastern Time. Donald Trump will hold forth with some pretty important executives who have already, upon his last visit as a candidate, expressed some concern about the impact of these very policies we're talking about, tariffs, tax cuts put together.
Yeah, we're looking forward to hearing, hopefully, from the president in the 5 o'clock hour in the late edition of Balance of Power. And I would also keep in mind we're actively waiting to hear from the Secretary of State, Marco Rubio. He's been expected to gaggle with press gathered in Saudi Arabia with U.S. and Ukraine talks now underway. It seems those talks have been lasting for an extended period of time that has delayed those remarks. But of course, we're eager to hear what the secretary has to say as the U.S. is suggesting both Ukraine and Russia are going to have to make some concessions here.
That's right. Secretary of State Marco Rubio in the room. Mike Waltz back there, Steve Witkoff as well. Our producer James told us they're about 9 hours in. James, is that correct at this point? They still have not emerged. Wanted to talk to Mara Rudman about this. This is obviously could be a pivotal meeting here. Professor at the University of Virginia's Miller Center, former U.S. diplomat with us back here on Bloomberg. Mara, it's great to see you. Does the length of this meeting, the fact that it's going into overtime, encourage you?
Well, I think it's better than if it was an abrupt meeting. There's certainly a lot to talk about. And in Mike Waltz and Secretary Rubio, you have serious thinkers who understand the ramifications of what the president and others have put out there. And so I'm hoping that this could be a sign that there are serious discussions underway and recognizing that all parties involved are going to need to be able to state clearly what their bottom lines are. And it's particularly tough for Ukraine because all of the negotiating is literally going on their territory or about their territory and about their sovereignty, which puts an added burden on them, which I certainly hope that Secretary Rubio and Mike Waltz understand and appreciate why U.S. interests are so at play here in terms of protecting Ukrainian sovereignty.
Well, we do know this came up in the White House press briefing just a moment ago, as the press secretary, Caroline Leavitt, says that the president has received positive briefs about the meeting so far today and that they'll have a full readout later on. But Mara, to your point about Ukrainian territory being in question here, what Russia is going to be able to keep hold of versus what Ukraine may be able to claw back. How do you see the minerals deal that the U.S. still seems intent on signing with Ukraine factoring into that, knowing that where a lot of that material actually is in territory currently occupied by Russia? Does that actually give Ukraine some leverage via the United States?
Hard to say. I suspect that the United States has also been talking to Russia on the minerals topic, and it's understandable for any U.S. administration to recognize that the United States needs to do far better in building and protecting a resilient critical mineral supply chain. I don't happen to disagree. I don't happen to agree with how this administration has gone about making those claims or assertions, but I expect they're having conversations with both Russia and Ukraine. For Ukraine, what's most important, and President Zelensky's chief of staff has already stated that publicly, is the need for security guarantees from the United States with whatever Ukraine may put on the table, in addition to their openness on the critical mineral side.
There was talk of signing that deal at this meeting. Mara, is that your expectation?
I guess I would be surprised if a deal was signed at this meeting. Certainly, you've got the Ukrainian defense minister there and the foreign affairs minister. So maybe it's possible, but I wouldn't expect that coming out of a discussion like this, particularly because the Ukrainians still need to know where the Russians are and what the Russian bottom lines are here, and we've heard very little discussion of that publicly.
Well, one of the Russian bottom lines we understand, which goes back to the point you were just making about security guarantees, is that there will be no presence of NATO troops in Ukraine to keep the peace, which is something that France and the UK have offered, the so-called coalition of the willing. If it can't be the Europeans, Mara, who realistically could serve that peacekeeping role?
Well, I should say, and it is important that France and Britain have offered to do that. They also want to know the United States is there as a backup. So what the United States is willing to do and how is critically important. Russia has already shown time and again, frankly, that they will take all that they can take and that their word means very little, that you have to, those on the opposite side need some backups of force, and they need the strength of the United States there to ensure that Russia complies. And that's why it's so important that the United States indicates some willingness on the security guarantee side, and also in supporting what France and the UK have put forward in terms of on the ground peacekeepers.
Does President Zelensky need to come back to Washington, sit down with Donald Trump, get back in the Oval, smiles on their faces, saying thank you and so forth, to get this back on track or to move the ball forward?
I would hope that for the United States and for this administration, our keen eye is on what how to best serve U.S. interests and how to best protect U.S. national security. And that shouldn't be by requiring a formula of magic words to the president of the United States to make him feel better. His job should be in looking out for U.S. interests writ large. And so getting the deal done that best serves U.S. interests should be through whatever route we can get that deal done. I hope that is part of what Mike Waltz and Marco Rubio are trying to figure out and assess in their negotiations, in their discussions now.
Well, Do you think that President Trump, though, is of the belief that a stronger, better fortified Western Europe is actually in the U.S. interest, considering when we've heard him talk about European allies, frequently he's talking about that, yes, they have not spent enough on defense, but also that he views them as kind of economic adversaries in the sense who have unfair trade relationships. He's threatening them with tariffs while all of this is going on, Mara.
Yeah. Listen, my concern about President Trump is that, at least in all of the public statements he's made thus far, he seems much more eager to cozy up to strongmen and other authoritarian leaders, and to work out deals with Russia and China, for example, while the rest of the world needs to just scramble around the margins. I don't think that's what serves the security interests of the United States, nor obviously the rest of the world. But that's my concern about him. So yes, that's completely consistent with the view that he doesn't recognize the importance of friends and allies and partnerships that the United States has worked so hard to cultivate and ensure over the last years. I hope that there are people around him who are trying to correct and adjust that view and work with him to have him understand the importance of these relationships.
All right, Mara Rudman, professor at the University of Virginia's Miller Center and former U.S. diplomat, joining us here on Balance of Power. Thank you very much. And again, to reiterate, we did hear from the White House press secretary that the president has received positive word from these talks so far in Saudi Arabia. Full readout expected later, as well as potentially remarks to the press from the Secretary of State, Marco Rubio.
Yeah, we'll have quite a bit more to talk about when we get back on the air at 5 p.m. I hope you can join us on the late edition of Balance of Power as we track a couple of storylines here. This meeting, of course, in Saudi Arabia, Donald Trump's meeting, the president going to the business roundtable right as we take air following the closing bell today. And then, of course, a 4 p.m. vote on a stopgap to keep the government from shutting down on Friday. That happens in the House, Kailey, and we have no idea how that's going to end.
No, we don't. The votes don't seem necessarily to be firmly there at this point. And of course, the backdrop to everything Joe just said, financial markets that are still under pressure today. We're off the lows on the S&P 500, but it did touch into correction territory.
Thanks for listening to the Balance of Power podcast. Make sure to subscribe if you haven't already at Apple, Spotify, or wherever you get your podcasts. And you can find us live every weekday from Washington, D.C. at noontime Eastern at Bloomberg.com.